Ladies and gentlemen, Greg Mikulowski from ForexLive.com. Today's date is April 15, 2024. This is a Kickstart video where I take a look at three of the major currency pairs, the euro versus US dollar, the dollar versus yen, and the sterling versus US dollar from a technical perspective. Fundamentally, this weekend we had Israel being attacked by Iran, a retaliation attack with Israel and other ally forces thwarted that attempt without minimal damage, with 99 quote unquote 99% of the missiles being intercepted. We also saw this morning, we saw retail sales move higher in the U.S., better than expectations. We're seeing stock markets rebound after concerns over the last week with declines going into the weekend. But the market seems to be confident that the war is not going to escalate, so stocks are rebounding. We're also seeing yields move higher on the flight to safety, flows from last week being unwound as well. With all that said, let's get into the technicals that are driving these three major currency pairs. We'll start with the euro versus US dollar. Looking at the 4-hour chart of this currency pair, we did see the dollar move lower or higher in trading last week with the flight into the relative safety of the US dollar, and that took the price below this swing area through here. This is the last swing area before the price based and moved to the upside, and hadn't returned back to that level until last week, where the price moved below those levels on Friday and closed below that swing area between 1.0655 and 1.0675. As you can see, the price action in trade today has been up and down, but we remain below this swing area. It will take a move back above that level to increase more of a bullish bias, in which case we'd start to look toward the other swing levels going back in time, including this low right here at 1.06941, the 61.8% retracement at 1.07133, and this swing area floor through here, where we had a number of different we started off with the ceiling right here, and then developed this floor right through here, which was pretty solid there for a while, and then we fell below that level and then reestablished the floor, which made it even more solid, I guess. We did come down to that level in trading last week, midweek, and then traded below the level and used the level as resistance here to move to the downside. So that's another target on the top side should the euro versus US dollar move back to the upside here. Now, fundamentally, of course, the ECB is being a little bit more dovish than the Federal Reserve officials, who last week as well kind of pushed out the idea that a cut was coming in June or July, maybe even. But we will see how that all pans out. But meanwhile, in the ECB land or Eurozone, the ECB officials are saying that a June cut is still in the cards, and that's keeping the euro under pressure from that fundamental perspective as well. So watch this level up to 1.0675, stay below that level, keeps the bears more in control, and then on the downside we'd have these other lows down through here as target areas for the pair, including 1.0520, 1.05316. Other than that, we're just in this swing area down through here, looking back in time. So there's not a lot of anything to hold on to. So the question for traders is stay below 1.0675. Let's take a look at the dollar versus yen. We saw that pair move sharply to the upside in trading here today, and also moved higher after the retail sales data up to a new 30-plus year high at 154.412. By the way, if you go back to the monthly chart and take a look at where we are in relation to that, you have to get all the way up to 160.504 through here. Again, this is a monthly chart, so we're missing a lot of the detail through here. But there's not a lot here until we get up to the 160.50 level. It went straight up and then came straight down after that level. So, and this swing area right through here, we're above that area between 149.70 and 151.65.9. So things are still fairly bullish here for this pair, with not a lot to really hang on to. Going back to the hourly chart, if I put a Fibonacci from this move to the upside, this was the trend type move. We did come down on Friday and tested the 50% retracement of this move to the upside, and then started this other move to the upside here. So this is the next trend move. What I like to do in that situation is look toward the 38.2 to the 50% retracement as levels I would need to get below to increase the bearish bias. They come at 153.71, 153.50. So remember those two levels, 71 and 50. If we get below those levels, then it shows that the sellers are quote unquote winning, even if it's a little bit. If they can't get below that level, the sellers are not winning. Okay, they're not winning. So let's remember 71 and 50. If we go to the 5-minute chart, that's an interesting picture on this chart. Why? Because look how the 100 bar moving average held support right here. That level comes in at 153.89. So getting below that level would be a negative in the short term, very short term. If the price can stay below that level, that would be more bearish. Here's the 71 level. Here's the 50 level. Those are other levels on the downside. So be aware. Close support comes in at 153.89.6 right now and moving higher, just because the market did hold that 100 bar moving average a number of different times here. So I think it's paying attention to it, that it's being the market. Finally, let's take a look at the sterling versus US dollar. And if we look at that on the 4-hour chart, we broke to the downside in trading last week and moved down to this swing area through here. That level goes back in time, 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 all the way to this area right through here where it was really originated. But you can see how it fell below as more bearish, moved above it as more bullish through here. So getting back to that level and finding support against that level on Friday was somewhat positive, I guess, and we are moving a little bit higher off of that news. The other targets on the top side become other low prices through here and right through here and here and here. So these levels are the targets on the top side for the sterling versus US dollar. If we get above them, then we look toward the broken 38.2% retracement as resistance to 125.65. On the downside, we need to get back below the 50% level at 124.64 and then get back below the swing area between 124.27 and 124.50. So there you have it, a look at 3 major currency pairs to start your trading week on this Monday. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.